Securities and advisory services offered through Royal Alliance Associates, Inc., member FINRA SIPC, and a registered investment advisor. Insurance offered through the Monteverde Group, LLC, not affiliated with Royal Alliance. The views expressed are not necessarily the opinion of WWVA Radio or iHeartMedia and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risk, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice.
Now here's your host, Steve Major.
Good morning, everyone. Thanks for joining us. And as usual, I'm joined by Jason Haswell, who is the managing director of the Monteverde Group here in Wheeling, West Virginia. We'll give you a phone number a little later on, and you can give us a call. He'll answer any question that you might have. Before we start, I'd like to give a shout-out to our veterans today.
That's great, Steve. Absolutely.
Yeah, absolutely.
Wouldn't be here without them. They
wouldn't be.
Amazing things, and we thank them for our freedom every day.
Every day, and certainly a day to remember them, honor them. If you see one, shake his or her hand and
Absolutely.
Say, thank you very much.
No doubt about it.
All right, today, equity research and analysis makes a full mouthful, to say the least. I guess, what are the different ways to analyze stocks? You do this fundamentally? Do you do this technically, or some other way?
Like today, I wanted to kind of throw this out there. A lot of people are doing some of their own research, and they follow the market and. On a daily basis, there's so much information available now on the internet that you can do a lot of your own research and look at things. But the question is, do you look at it and do you know what you're looking at? I mean, there's so many different factors and things like that. But typically, if you're looking at and what we're speaking about here is mainly we've spoken about ETFs and mutual funds before, which are a little different animal. But when you're looking at individual stocks. There's a couple different ways, like you mentioned, to look at it. You can do it fundamentally, which is the nuts and bolts of the stock. How are their earnings? What are their PE ratios? What kind of debt do they have? What kind of company is it? Cash flows, things like that. So, a lot of people look at things from a fundamental standpoint. How does the company stack up versus other companies in that universe, or according to their earnings, according to their debt levels, what are their sales like, things like that. Other people look at maybe the technical side, and the technical side is there's some factors where you're looking at formulas and charts and things like that. But basically on the technical side, you're looking at a stock that maybe has decreased in value for one reason or another, and or it's broken out to the top side for one reason or another. But technical, you're looking at where does it rank according to the charts? How has the stock moved? Has there been a double bottom on the stock? Has there been a double top on the stock? There's a number of different technical terms you can throw out there. But when you're looking at it technically, you're basically looking at a chart. You're looking at volume on the stock. How much is it trading? What's the options volume on that? How are the institutions or some of the larger mutual funds or hedge funds buying that stock, and where does it rank? You're looking at its chart over a period of time. How high is it? Has it broken out? Has it dropped off significantly for one reason or another, but it looks low on that chart based on where it's been in the past? What are its moving averages? What's its 50-day moving average? What's its 90-day moving average? What's its 100-day moving average? So, and maybe you get an opportunity when a stock's fallen on a chart below one of those averages, you get a buying opportunity that may not be there otherwise. It's sort of an anomaly. So, and a lot of people, what we typically do when we're looking at individual equities, we're going to do a combination of the two. We're going to look at the numbers and the nuts and bolts of the company. We're going to look at, how does it rank? Is it a good value? How are the earnings? Are they consistent? Does it pay a dividend? If it has, how long and how consistent has that been? What's their debt level? What's their cash flows? what is on the horizon, maybe that could be good 6 months out, 12 months out, or, maybe they're developing a new product or introducing, you look at Apple all the time. They're always coming out with a new phone or a new iPad. And we mix that with where it sits on the charts. How does it look? Is it a good value based on those moving averages we just spoke about? Has it broken out to the top side? Maybe it's run too much. It's something we don't want to get because we think it's getting up to the top side. So we're going to mix those two to help pick, what we think fits, a client's portfolio. Naturally, you're going to look for yourself, as we've talked about on the show, I think probably every week. It's got to fit your risk tolerance. It's got to fit your objectives and goals in order to place it in the portfolio. So you want to make sure, first of all, you're looking at individual stocks that fit your goals and your portfolio and you're diversified. You don't want to get too heavily weighted. You may think it's a great idea, but you don't want to too heavily weight yourself in one security because it causes you some undue risk. So once you look at these factors, you look at the technical side, you look at the fundamental side, then you sit down and kind of analyze all that and see if maybe that's a stock you want to purchase.
Do you find that many times a client will come in and basically says, look, I know what the stock market is, but I have no clue.
Sure.
I need help here. Mm-hmm. And it's not just the stock market. It's investing in particular.
Sure.
You got to start from the ground up because I think it's safe to say that the common Joe, for the most part, doesn't sit around and look and or play the stock market every day.
Right. You're absolutely right.
So if I were to come to you, I'd say, Jason, I know what the stock market is. I know it goes up and I know it goes down, but I don't have a clue. You got to offer me some help and some assistance here.
Exactly, and we have a common. Most of our clients are kind of we meet with them like we've talked about before. We meet with our clients on a quarterly basis. We go over things. We tell them what's going on, and we give them our opinion. And that's why they they hire us to do that job.
Right.
But I have also several clients that like to participate. They want to throw ideas at me. They're looking at certain things because they enjoy the market. They find it fascinating. It's something they've done for years. Maybe they did it with as I did. My father started me looking at stocks when I was young, and that's how I got really fascinated by the market and loved it. And I have several clients like that. I have some that participate actively in the management of their portfolios, and we welcome that. I mean, it's nice to have somebody. But most people that walk in the door, when I talk about current ratios and PE ratios and debt levels and price to book and price to sales, they look at me like I got 5 heads, and that's why we try to bring that information to them in a way that they can understand. But we're doing the research. We know what to look for, and we share that with them and say, here's why we like this. In the end, it's the client's, decision. It's their money, so they're going to, we're going to provide them with information, and they're going to give us the go ahead. But a lot of people just don't know the technical terms, and it's just like dealing with anything. Where I hear people talk about managing their own portfolios, but yet you talk to them about the nuts and bolts of how to pick things, and they just don't get it. You don't want to put your financial future, in the hands of someone, even whether it be, an outside person like a financial advisor or yourself that just doesn't understand what they're doing. And it's just, you wouldn't go to a doctor that, isn't very good. You wouldn't go to somebody who, doesn't understand. You wouldn't go to a neurosurgeon, if you're getting your feet worked on. You wouldn't go to So you want to make sure that you got somebody that understands what's going on. And we tell people that. We want you to actively participate, and if you want to learn to trade, we'll help you do that. But educate yourself before you start going in and placing real money. I tell some people, if you want to participate, build a dummy portfolio. When I say dummy, I mean fake.
Right.
Go out and pick 10 stocks that you like and do some research, and then pretend like you're investing $10,000 in each stock, and then just watch it and see what it does.
Right.
And get a feel for how things go before you actively try and trade things on your own. Now, naturally, most of our clients, we do that for them. But and they participate. But some people like to have an account on the side where they trade their own stocks. And you got to make sure that you're looking at these things and you're educating yourself before you place real money in those. You're thinking about your future here.
There are people who indeed do know the stock market
fantastically well.
And they can play, and they know when it's time to make a move. So far, I mean, I can go to the wellness center and be on a treadmill, and I see a guy looking up and say, "Oh, the stock market's up," and I see the wheels turning, and I'm thinking to myself, "Okay, this guy's into it. He knows, he knows something about the stock market."
Yeah,
you can feel it, you can see it.
Yeah,
and which is not a bad thing at all.
No, it's great.
But then again, as you said, it's okay when they come to you.
Yes.
Offer their suggestions.
Yes.
And
the good thing is we give them a sounding board, meaning they can come and say, okay, Jason, I was looking at this stock and I see this, this, and this. Am I seeing this the right way? Is there something I'm missing? And we can offer them where I'll say, yeah, you're seeing the right stuff, but did you think about this? And, oh, no, I didn't. So, I say, yeah, you're looking at all the right stuff. That looks great. It's a good idea. And we give them a sounding board to bounce ideas off of and things like that, where they may see things and just question, is that good or not? They can call us and we talk to them about it. But it gives them a little bit of backup, before doing anything, or even if they're just following the market as a whole to see, basically, am I seeing the right things? It gives you, it's always good to have a couple brains and two sets of eyes looking at things. I think that's great. So, yeah, we give them a sounding board. I have clients that, specifically, I have one client that is as sharp on the market as anybody that I've ever dealt with. He gets it. He does research. He talks to me all the time. He looks at amazing things, actually. He travels a lot, so he calls me and says, trucking's up, shipping's up, I'm seeing this. I see equipment being shipped. I see shingles being shipped. Maybe we should look at infrastructure. He gets, and he's done it for years. He's educated himself for a number of years. And, he's a pleasure to deal with because we can talk. I mean, we talk market like I would talk to my colleague. He knows his stuff, but it's taken him 30 years to get to this point. And he reads and educates himself on a daily basis.
Wow.
Yeah.
Okay, we're about ready to take a break here. And before we do, let me give you the 1-800-624-1170. That's the number to call in. If something has spurred a question, then call, and Jason will do his best to answer it. 1-800-624-1170 is the number to call. We'll take those calls, but we'll continue with more on equity research and analysis right after this break. We'll be right back.
Sometimes being great at what you do requires meticulous attention to detail. It's about the nurturing of a mission. It's about getting the job done. At the Monteverde Group, we work like you do. Our approach to wealth management is in the finer points. The precise execution that can only come from advisors who listen, talk, and plan with your future in mind. The Monteverde Group, helping clients grow, manage, and preserve wealth.
This report is brought to you by the Exergen Temporal Scanner Thermometer.
News Radio 1170 WWVA. Severe Weather Team 9 forecast.
We kicked off the weekend with record-breaking lows this morning in the teens. Today we get to 40 degrees this afternoon, sunshine mixed with high clouds. Partly cloudy skies tonight, down to 28, and on Sunday, clouds mixed with some sun, high of 47, and a few rain showers by Sunday evening. I'm Severe Weather Team 9 meteorologist Stephanie Allison.
With a little help from Walgreens, diabetes won't slow you down. With caring pharmacists, medications you rely on, and testing supplies from all the major brands. Where is it convenient? And where do I matter? At Walgreens, at the corner of happy and healthy.
iHeartRadio is the easy-to-use app for music and radio. Download the free iHeartRadio app today.
Refreshing your news feed at the top and bottom of the hour and posting opinions the rest of the time. News Radio 1170 WWVA.
1-800-624-1170 if you happen to have a question. What are the key components of, or let's say metrics, whichever, of actually researching and picking a stock, or several stocks for that matter?
Okay. A lot of, and it varies for different people. Some people favor different things. I mean, if you ask, Warren Buffett what he looks at, and you ask, George Soros, what he looks at, and you ask, and these guys are big hedge, everybody knows who Warren Buffett is. George Soros is a big hedge fund manager. Jim Chanos or Tepper with Appaloosa, and all these guys that do this. Everybody's got their own favorite thing that they like to see, and Warren Buffett's on a little more conservative side, so he always likes to see good cash flows and things like that. Is it a solvent company? But the metrics, we try and look at things like, price earnings ratio. Where is the price in accordance with the earnings on the stock? You want to try and keep that at a reasonable level, to make sure you're buying the stock at a good value. I like to look personally at price to cash flow, price to book. I think, book value on a stock's what, if you break the company up and you sell it, what's the book value of the stock? On paper, what's it worth? And if a stock's trading at, far above its book value, basically that's not, it's just like any product. If you look at it and it's trading and the cost of that product is a lot more than it should be, maybe, there's a reason or whatever for that where the cost is a lot higher. So that's something that maybe is not a good value. But if you can look at a stock that's trading at less than book for one reason or another, maybe they've had some turmoil or something's happened where you can get that stock at a reasonable price, but their earnings still look good and their cash flows still look good. And it's a good solvent company, but for one reason or another, they're trading at a level that's below that book value. They may be a good bargain. So book value, price to book, price to sales, price to cash flow, PE ratios, what's the debt level of the company? Is another metric that is good. How much debt do they have? What's it cost them to service that debt on a regular basis? They may have the best earnings in the world, but if they have a ton of debt that they have to service, those earnings aren't paid forward through to the investor. So that's something else that you may want to look at. And from the technical side, we talk that's more the fundamental side, is the nuts and bolts of the balance sheet. But on the technical side, where does that stock? If you look at it on a chart, where is it in relation to its 90-day moving average? Did something happen with the stock? Maybe they missed earnings for a quarter and dropped off, but things look good. They predict that, going forward, things are going to be fine. So maybe it's an anomaly where you can pick up the stock cheaper, or, something happened, a lawsuit, or, with a company, maybe there was an accident, or it could be any number of different things. But what you're looking for is something where the stock dropped to a point where it's on the chart and on the moving average level or whatever it may be, it's cheaper than it's ever been, and some people look at that and go, oh my God, it's cheap, I got to buy it. Well, you got to make sure, you got to see why it's cheap.
I was going to say.
Yeah, there may be a reason. Yeah. You're paying not a lot for a reason. So, you want, if things look good going forward and this was an anomaly for one quarter or just something that happened, gives you an opportunity. But if it's an ongoing thing and the stock's dropped to a certain level for significant reasons, earnings are falling off, there's major problems with the company, you see management turnover, things like that, then it's a different thing. Some stocks are cheap because they're not very good.
Well, it's like anything else. I mean, if you see a deal,
yes.
If you see this is 75% off, you walk into a retailer. Your first question, you're thinking, okay, why?
Yes.
Yeah, same thing with stocks.
It's just
why is it such a deal?
It's like any other product you're looking at. I mean, if there's huge demand in something, the price is going to go up. Well, then is the price inflated for a short period of time because that demand's high? If there's no demand for something and the price drops, do you want to own an asset that has very little demand or may not have demand going forward?
Right.
So you just got to, that's why I say it's good to use a combination of things when you're looking at the individual equities. Is look at the fundamentals and see the balance sheet. Is everything okay? And look on the charts and see why it's maybe where it is. Mm-hmm. And if you mix the two, you should get a pretty good look at what the company is and will be going forward. And you got to do your due diligence. You got to read a lot. I mean, that's what, I'm on 18 different websites and, a number of different, because I read a lot about where things are going and why a company had an issue. And you got to do some of your legwork in order to figure out why they are where they are. Right. But it takes some time. And the reason, people use us and what we do it all day long. I mean, we're doing the research, we're looking at things, we study the markets, we're looking at how things are going, we look at the indexes, things like that. What sectors look better. But most other people have a job, so it's tough for them to spend the time that you need, I think, in order to make an investment in something with your hard-earned money. You got to be able to spend that time, and most people aren't going to do that. They just don't have the time to do it.
One key word that has surfaced, I think, in every program that we have done is risk.
Yes.
Can you measure how much risk you should take when getting ready to purchase a stock or stocks?
If you don't, I think you're making a huge mistake. Okay. I mean, number one, your portfolio should not be invested in one security. I mean, it should be, you want to try and diversify yourself. Now, some cases, you may have old family stock that has no basis. You're going to hold it for years because there's a tax consequence. It could be a number of different situations where you can't get rid of it because of certain things. Right. That's different. But if you're diversifying your portfolio, you want to make sure that you're spread out over a number of different things. Now, that's not to say that you can't go in and find as a piece of your portfolio, and we have a lot of clients that do this. We diversify their portfolio in a number of, whether it be mutual funds, ETFs, whatever. And then we have a portion of the portfolio that we may put over 5 or 6 different individual stocks, but we make sure that those are balanced over different sectors and things like that. So if you individually are looking at a security, make sure if you got $100,000, don't put 80 of it in one security.
Right.
Go out and make sure that, if you're going to take an investment in an individual stock, make sure that when you put that money in there, that it's a portion of the portfolio that you're willing to accept a little more risk because it's going to be a bit more volatile than if you took a fund. So make sure you're measuring that risk. And, some people get, they hit a stock and it goes through the roof and they're all excited and they take that money and then they start putting more and more. Make sure you maintain that balance and make sure you maintain that diversity where you're not overweighting yourself and chasing things. Because, if you miss one, big with a lot of money, it could cost you, especially a few years towards your retirement. So you have to measure the risk you're going to take. And you always hear guys, I heard about this stock and, Bob at the,
right.
The
I know.
night. And you just do your due diligence when you're doing that and make sure that if you do take a risk on a stock that, may be something that's not a well-known one or a small company that's about to, supposedly have a ton of growth, make sure you do your due diligence there and don't put a huge portion of your assets. You can take a position, but you always want to measure that risk level before you buy an individual security.
All right. Then the other side of that is, how do I know when to sell the stock?
You know what? I'll be honest with you here. Buying them, you can find good values and do your research and find some. The hard part is sometimes knowing when to get out. And, we struggle with that a bit sometimes, and I think everybody does. What's the level? A lot of people, and something we do a little bit is you may want to put basically you go in and if you're looking at an individual stock and you say, hey, if I hit 20%, I'm going to liquidate the stock. You do it as a measured way of getting out of it. So if I hit 20% on this stock, I'm going to go ahead and put an automatic sell in and it comes out. That's one way of doing it. That's disciplined. You're not going to chase things. And the thing I tell people about stocks is, don't ever get sentimental about owning individual stocks. Don't say, oh my God, I love the company and I've been in it for years. Mm-hmm. That's not a reason to own an investment. They're not your children.
Right.
So, you want to measure things based on an analysis level and how they're doing. But yeah, a lot of people put in a disciplined sell strategy where if they hit 20%, 25, 30, depends on different people. You put an automatic sell in and then you move to a different stock or whatever and diversify yourself. But, sometimes it's difficult. You get caught up in one that does really well and people don't want to get rid of it. And, this stock's made me so much money, how can I get out of it? What we'll do a lot of times, we may take half the position off and then diversify it. If it's a good company that's made us a lot of money, we may still want to own it, but the stock's getting a little high, so you may want to, take half. You got, 500 shares, you sell 250, keep the other 250 and diversify to another, equity or whatever. But, you want to have a disciplined sell strategy that, you don't let sentimentality get into it.
Do you have clients that just simply stay away from stocks, period?
We really don't. I mean, I have a few people that are more bond weighted, yes.
Okay.
And it's just because of their risk tolerance and where they are in life. Maybe income's a bigger need and they don't want volatility, so we build the portfolio to keep the volatility down and the income levels up. Again, it's like we've talked about on the show before. Every client's like a snowflake. Everybody's different depending on what they want. But yes, there are some people that just, they're going to have a small portion, or you may have clients that prefer, municipal bonds or whatever, and that's the side of their portfolio they want, and they've grown their assets. They're like, just give me this X amount of income and we're good with that. So yeah, I mean, some people get to a certain point where they're just, I don't really want to deal with that side of the market. We don't see a lot of that. Most of our clients are going to have some position in the market so we can grow the portfolio faster than inflation. We want to stay ahead of inflation at all times, and typically the market is the place to do that.
Okay. If you happen to be somewhat of a newbie, if you will, the Monteverde Group is located in the Wagner Building. That's at 2001 Main Street here in Wheeling. And their telephone number is 304-905-0641. If this program has kind of perked your interest and says, I don't know, maybe I'd like more information. Maybe I don't, and admittedly don't know enough about it.
Sure. Give
the Monteverde Group a call.
Please do.
And come in, sit down, and find out if it's right for you.
Yeah, we'd love to talk to anybody that has a want or a need, or wants to, even if you just want to educate yourself and you got a portfolio you're managing, maybe we can help you do that.
All right. Jason, as always, good to see you.
Good to see you, sir. We missed you. We missed you last week. It's nice to have you back, my friend.
Nice to be back, and thanks to Tessa. I'm sure you were probably smiling more looking across the road than me, but anyhow, we'll see you next Saturday. Have a great week, everybody. See you again next Saturday.
Bye-bye. Let's go Mountaineers.
Yay.